Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, October 6th, 2021, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and a little bit later in the show, we're going to bring on our very first special guest, Death 8U from our Discord room. In this week's episode, we're going to talk about some of the things Viper and myself and Death 8U have been trading this week. But before we hop to that conversation, I want to give a shout out to our Discord channel. There's a link in the description below, and this episode is being streamed live to the Discord right now. Follow that link to hop in the Discord, say hello, tell us what you're trading. Love to hear from you. Check out our streams every Wednesday night. Also, you'll find a link in the description below to thetagang.com/sprocket888, where I post each and every one of my trades, the good, the bad, and seemingly lately the ugly. But let's hop to this week's content. Viper, another week and another deja vu, just slipping and sliding down that S&P, and markets just kind of sliding a little bit choppy, a little bit all over the place. What's going on in your camp this week?
Yeah, this week. So I think it was last week I talked about clearing out the book and, haven't really done anything in there since then. So still waiting on a couple setups, and also not super aggressive on screening. Like I think I closed last week talking about how it was time to hit the screener and find some new plays. Because kind of this week, the plays kind of took me over into the world of crypto. And it's been like, I mean, I'm not playing with nearly the amount of money that I would normally have like in my stock portfolio or anything, but this has been just taking up a bunch of time because it's been a good few days to be messing around in crypto. So in particular, Shiba Inu, I wanted to talk about that. So what's been happening here is, as you can see, just here goes the rocket to the moon. This is, and I'm pretty sure we could go back on previous episodes and find somewhere when I talked about crypto and I said I was never going to touch this thing.
Not only like, is this crypto, you went with Shibu. I'm not even familiar with this crypto.
Yeah, this is not just a meme coin. This is a meme on a meme. This was kind of a spinoff of the Dogecoin. And I'm pretty sure, I mean, I think it might have been Doge that I was talking about, but still I was like, I'm never going to touch this thing, but yet here we are. So, what's been happening is this thing, I mean, it trades at, I don't even know, 0.4 zeros and then 3 numbers is about where it's at right now. 4 zeros. And then that's how many cents per coin. I mean, this thing, there is a techno. So I don't know. I guess I want to back up and talk crypto for a second. There are, in this rabbit hole of crypto that I've gone down, like there are some coins that I am just legit stoked about as far as the future and technical abilities and just what they open up, what they're doing as a coin and as a platform. So those exist. I like Shiba seems like it started as a joke and all of a sudden it caught fire. And so then they tried to start adding some of that platform functionality to it. But I mean, one of the things about it is, I guess I should double check, but I'm pretty sure it's an infinite supply, kind of like Doge, which I mean, right away, I don't know. That's weird. But anyways, nonetheless, real money is happening. So that's a thing too. And so what we can kind of see here is we're seeing this taking off here. And if we go back a little bit, so when you're charting crypto, you have multiple choices when you put in the coin it's generally coin name USD, because you want the coin translated to USD. I mean, you could do the coin name and BTC or something like that to chart it versus Bitcoin value. But what you can kind of see on the right side there is you pick what exchange you want to use for charting this. And so the reason I bring that up is I'm using SHIB USD from Coinbase. And so obviously, like the coin didn't start, right here where we see these two candles. The coin's been around a lot longer than that. But what I thought was interesting is in using the Coinbase chart is this is when Coinbase listed the coin as being tradable on the Coinbase platform. And so for all intents and purposes, that was a good enough starting point for me. And what we can really see here is we can see how it listed and the price exploded. If we were using one of the other exchanges, you would see the tail, an exponential growth, and then the tail way back down here in the previous times. But I thought this captured very nicely how we had this spike in price when Coinbase listed it. This generally happens with cryptos when a major exchange lists the coin, price skyrockets, and then it comes flying right back down to earth. And so this started to open up the door to the opportunity that was here. And I guess we'll get into some of that speculation in a minute, but as to why that exists. But suffice it to say that even though my chart doesn't go before this time, nothing is at this level previously. So these levels that were made over here are the gap. I mean, that is what's next. And so I was kind of late on this, started to see things pop up, news articles about how SHIB was taken off, and my brother-in-law has been in it for a while. And so then he's letting me know. And so I was like, all right, let me check it out. And sure enough, so I jumped in late with a couple potential FOMO entries that turned out to, okay, nope, I'm fine. These are covered. But ultimately I wanted to, because especially on something like this, when you're talking a meme coin that's just going bonkers, I want to keep that focus of, no, stick to some fundamentals here. Like, don't just throw money at it and then pull money out and be like, oh, I'm amazing. Like, I mean, actually, like, that's what I like about crypto is it gives you the vehicle to really practice a lot of what we talk about when it comes to price action or things like that. So that was kind of how I was using it. And I want to highlight real quick kind of what I've done so far. So now if we zoom in, as far as the upside, let me go back out for a second. So as far as the upside, I mean, I'm looking at on the hour chart here. I mean, we probably, if it's going to, keep filling this gap, I'm looking at, this wick, we're talking just the last four digits, please. 3,800, maybe not a reaction until 44.95. We'll call it 4,500. Maybe somewhere around there. So that's kind of the upside that I'm looking for, but I'll also, kind of trail my stop loss on this as soon as it, to catch a lot of what I've built into my play here. So now zooming in on the action, we can see, first of all, just obscene volume. This is volume that even, there was a little bit of that volume back here, but this is now steady. And just, I don't even know the word of how greatly increased that is to all previous volume. And so that's just going to carry a ton of momentum with it. So zooming in now to the recent action, this is kind of what I've done so far. We bring all these on, and how I kind of read the chart, because again, whether that was too many, whether it was necessary or not, when something's taken off, you can just draw lines on the piece of paper and say, I did some research and look, it's panning out. But nonetheless, here was my attempt. Was these are roughly day windows here that I have highlighted, um, and what was generally happening was we'd get a swing into just a slight sideways channel where we would kind of hit the top, we'd hit the bottom, we'd kind of slight, I guess on this first day, maybe slight pennant pattern a little bit, but if we bring it down to like the 3 minutes just to get some more candles here, just to show more of the action. We would basically swing up to the top, we'd come down, we'd hit a level, and we'd kind of bounce there and lower highs, similar lows though. So we're kind of consolidating, and then we boop, pop up, and we repeat. And so that was kind of what I was charting here, was just kind of what were those relative swings before we popped. And so when I started buying was on this second one, again, just like last episode, when I talked about not nailing my entries, and that's where the FOMO is coming in. On this window here, I was like, all right, well, we already swung way down here and we're kind of swinging up, and we kind of, retest, a little bit of a local retest here, and we're bouncing off of it. So I was like, all right, I want in here. So I actually bought the bulk of my position here. And then, next day we pop up and we see similar action pop up and do a couple tests. Key to this whole thing to me is that common denominator on the bottom of each of these windows. That's keeping me bullish on it until we kind of break one of those. And then this is just action just within the last couple hours, which I haven't actually charted yet. So here we have some somewhat FOMO and also some, I think, good buy-in. This first one here was a swing up where I was like, oh, maybe this is the pop to the next level. If we zoom in and get a little bit better look at what was happening, we popped up and we kind of were running the same bottom here. We popped up again. So I bought here knowing it was a risk because there was no real confirmation of where we were at. And then sure enough, we slid, basically back down to this local bottom here, which would have been the real benefit. This swing up here would have been a much better buy-in for confirmation of a slide back and then kind of bouncing off. But I did, once we cleared up again to this level, the yellow lines are levels that I have charted to the swings that have been happening. So we cleared up, we came down, and we kind of bumped around a little bit and started to get this confirmation of this level. So this was, I think, a good solid buy that I did here. And then now we're up, and away again.
You're halfway to the moon.
Halfway to the moon. So that was kind of what I did and what my thinking was on it. I know, so Death Ate You, you kind of brought to my attention just how nicely crypto, the liquidity is so high, how nicely it charts out. So, that was kind of what got me going down this path of using it as practice, again, and also being in a much smaller amount that I'm using here. But I know you have a lot of crypto plays on at times, and it is my understanding you are not currently participating in this one. So what was going on, or how did you come to not be in this one?
That is correct, Mike. I am not in SHIB. The main reason is my crypto account is fully allocated, and I just didn't have any funds, and I didn't want to sell just to jump in here. We were talking before. I kind of mentioned I could definitely see this thing popping a few days ago. And it basically just comes down to, even if you just did a real loose support line. So let's just say ignore this wick, because this is basically just like a pump and dump. So ignore the wick, but you kind of pay attention to the retest. This is almost more important. So as far as the price action on it goes, it wicks up here, test, fail, test, fail, test, fail. It just continues to fail. But one thing you love to see is when anything starts to bowl like this, it just starts like this is just a nice accumulation down here. So it accumulates, but accumulation doesn't ultimately matter until you gain something. So once we gain, it rejects here, but once it gains that's interesting here because this was definitely pretty strong resistance and it gained. So there was lots of plays that get in on this early, but even if you were not interested in any of this, once it got above this, like that's probably the easiest play is wick to put your order in. So it wasn't a lot of time, but as soon as it closed above this line here, yeah, that was your entry. So, basic price action is resistance becomes support once it's gained. So this was resistance, we gain, it is now support. That if it holds support, that typically means a high, and it usually just means a high higher than this one. So this entry means a high higher than this one. So we do gain this, and it tests it.
Yeah.
And it holds. That means a new high higher than this one. It gains it and actually tests it right here on another 15-minute. I could go to lower time frames probably to see it even better. So again, it gains, tests. It doesn't in an extremely bullish scenario. That's what you typically want to see. You want to see it just test the top swing. So anywhere up in this range here will be the top of the swing. Anything down here would be the bottom of the swing. If you come down to the bottom of the swing and it holds, it's still the same trend. You haven't lost trend, but it doesn't look quite as good because you have to regain the resistance. So I think as you were showing, you had some of these ranges marked out in blocks, and those are good ranges that you marked because essentially you're boxing out the resistance turn to support. So I think you had probably a range somewhere around here blocking this, but ultimately you want to know how do you get trades out of these scenarios. And for me, you look for trend reversals. So if I know this is a level and this should hold, you could just have resting orders in here, but the higher probability play is you wait for it to come down to this level and you wait for it to gain something. So, and this fell a little bit below resistance, but it's still well within the range because nothing's ever a line. It's really a range. You draw lines to know ballpark where it is, but nothing's ever. I think that's kind of like a misconception when people put lines on a chart that they think it's specifically right here, but it's really the swing that made the gain is what you're interested in.
There's a lot of emotions tied to those lines.
Right, exactly. So just got the magnet on. So ultimately, what's important is this square right here. Because resistance, 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 swing down and gain. So this swing is what you don't want to lose. This is what you could call it an origin. I guess I wouldn't call this origin because this is just part of a major trend, but this is what you don't want to lose. So a lot of times I'll go ahead and just do one of these. You've probably seen some post charts in the Discord to have something similar. So once you gain the support, and sure enough, it hit it perfectly, right? But let's say you didn't want to put resting orders in there. If this is the resistance, or this is the top of the range, and we come in here and then it regains it, that's where you start thinking, okay, this looks good, and you put in orders. And typically you put in your orders somewhere in here. You don't want it to come back down to the bottom of the range. You want it to come back down to the previous low, not the low, but the previous low.
To get outside of the lines, I like that box being there. So on this, ignore the little dip into that box, ignore to the right of that. Invalidation then is when we actually lose that box and then start to hit previous high or previous resistance.
Yes. So once this is gained, you don't want to lose it. Let's say we came down to here. That is an indication of a trend reversal in the opposite direction because you've lost the move that made the high here. So let's talk about it on the flip side. This is one thing that is interesting is even on a really bullish chart, there's all kinds of short opportunities. The best way to trade is to have hedges and I know you guys have talked about hedges on previous episodes. So like if this thing is just skyrocketing, you may ask yourself, was there a short opportunity I could have used? Let's say I was long from down here. I should probably start thinking about hedging up here because there's no guarantee that we're going to continue to go up. So what you do that made the gain, you mark the swing that made the loss, which is that one. So we came up, hit some type of resistance, and then ultimately it swung and just lost this move altogether. It never made a new high. It just lost it. So you mark that swing. Ultimately, that is your resistance now. So you've lost that move, and you're going to come down to test support typically, but sometimes it'll just wick down and immediately hit test resistance again. So there's no guarantee you're going to hit support first. So what I like to do is if I see something like this where I want to get an entry in, as soon as it closes below, my resting orders are in. And sure enough, it hit a short play of about 20%. I'll take that any day. So not only do you have a long from down here that you're just riding, because typically on a long, you don't just want to hold because you don't know when it's going to stop. So you want to take profit. And a perfect trade is you also get hedged. So now I'm making money in the opposite direction. And I would have taken profit somewhere on my long. So now my short's running. And then when this gains, you refill your long and you take profits on your short. That's like the ultimate setup, is if you can just dominate the market both directions with a hedge.
But you're exiting your whole long there then?
No, never. Yeah, I guess I should go into that a little bit. Is I don't ever exit my entire position unless it gets stopped out.
Okay.
So if I took a long, this one's a little bit harder because there's no real levels that are obvious profit target. But typically you'd have some type of history here on the left of levels that you needed to gain. The other thing you can do with stuff that's kind of just riding in no man's land is use fib extensions, but that's probably for a different episode. But I always have to start off 3 profit targets set, and typically I'll do 20%, 20%, 20%, and then leave runners. And then it's kind of rinse and repeat. Pretty significant, like a pretty good move, and then you're looking for refills. So there's way more money to be made. Let me zoom out just a little bit. Sure, you can hold this and just carry it, and this is going to be a ton of money because it's mooning basically.
While we're talking, it just keeps going.
But there's way more money if you take profit, refill, profit. Yeah. Refill, profit, refill. You compound. It's compounding, and the nice thing about when you get a long that finally does make a bunch of money is your refills are profit. They're not capital.
Yeah.
You're not risking capital at that point. You're just spending profit to make more profit, which is what everybody wants to do.
Yeah, I think that was the thing that I liked the most about this chart. As far as, I mean, I guess we'll call it price action, was just like those 3 days right there, which even at this zoomed out, like they're clearly visible. The fact that, like you just said, they present themselves so cleanly, where you swing and then you blibble babble, and then you swing and then you da. And so
yep,
that gave a ton of opportunity to see that coming and go ahead, shave some off, go ahead and put the order in, or watch it or whatever, grab it at the bottom and just keep going. Although what it's currently doing, this is where as we're recording this and just watching it go, this is a long one.
This is the meme cryptos in action.
Yeah.
What's funny about those is there is traders trading it, but they get a lot of people that aren't traders just FOMOing
it. Yeah.
So pump. Yeah, like, I'm
so,
getting in. I don't want to miss out. But the fear of missing out is strong.
Yeah. So, but that's a good segue to one discussion Sprocket and I had a little bit earlier when we were texting about this coin. Was, where is this? And it's kind of a thought on where is this coming from? And obviously, yes, there's a ton of that happening, of just people that are just dumping money into something. But I mean, when we look at the volume that's happening right now and how insane it is, it also brings to mind the idea that, or the notion that there's probably a ton of algorithms that are trading this right now. Because I mean, especially in the world of crypto, you don't have a lot of the normal mechanisms that are in the stock market to keep people from turning something 10 times a second
Yeah, there's absolutely algos.
That I think
Um,
that's part of why the on something that's not mooning currently, why the levels are so strong is because algos help define those levels. And if the majority of what's moving the thing are algos, it's just, I mean, if you can understand the mechanics of the levels and stuff, it's just ripe for the picking. Like jump in. And when a setup presents itself, because you'll get those levels to stick.
one of the traders that I kind of learned most of my trading style from is what you would call a market maker, and he does market making with crypto, which essentially means you have, not only do you have a lot of capital, but you also have a partnership with the exchange in order to create liquidity for the exchange. That's ultimately what a market maker is for, is liquidity. Um, but I kind of learned a little bit of the inside, which is interesting on how they can you can't completely control price, but you do have a big influence on it. And the market maker wanted this, let's just say they wanted this level to hold. They can put in a bunch of orders that never actually get filled, but will hold the price. It's interesting when you hear the discussions on it, but I won't kid myself and try to talk about how to do market making, because it's way more complicated than that. And you really do need your own software to work through the exchange's APIs to actually do it. But yeah, it's interesting. But one thing that holds true is the price action works in anything you can trade. The price action holds. Doesn't matter if it's crypto or the indices or stocks or futures. You can do the exact same analysis, and
Yeah,
that's kind of the beauty
for
of it.
sure. I have a feeling we're gonna look at this by the end of the episode, and it's already gonna hit the one of those levels that I talked about.
This is one thing that I find more confusing in the world of crypto is in stocks and stuff, there are a lot of exchanges, but they don't typically all have the same product. It's weird in crypto to see the same product on so many exchanges.
It is very weird.
Weird is the order of the day in crypto.
Yeah, in the crypto, there really is no regulations, and there's some really shady exchanges out there. Like
Mount
I would
Gox.
say anyone listening interested in getting into crypto, do your research.
Yeah, for
Um,
sure.
there's exchanges out there that are just scams, and they will absolutely take your money. A lot of these exchanges will go under the way of we got hacked.
Yeah.
Just conveniently they got hacked.
Yeah, and honestly, I mean, not that you should take my advice for it by any means. One of the reasons, like, I mean, when you get deep into this rabbit hole and like people are talking about what exchanges they use and whatnot, invariably there's many camps, and a lot of people don't like Coinbase. But ultimately, I primarily use Coinbase just because of it could be. I mean, anything can be a scam, but I mean, the fact that they're putting as much effort into um, being a company, listing on the stock market as a company, just things like that. That yes, that maybe they have more fees or more of this or that, but like I also don't want to mess around with the weird corners of the web just to save a few bucks on fees. So, but absolutely, that is an important disclaimer of if you're going to get into crypto, there's tons of head work or tons of legwork to make sure you're doing things as best as possible, and sometimes that's hard to feel out. So like I said, I have a feeling before this recording is done, we're going to come back and see that run that was happening while we were talking is going to present a pretty strong resistance level, the next level, you could say.
This thing's got a one-way ticket to the moon. That's what I think. This is going to be like $10
Yeah,
here by the morning.
Yeah. Which that's the other thing I just real quick want to say is people keep saying, oh, well, SHIB's going to hit 1 penny. I mean, reality check, that's just not going to happen. If you do the math, SHIB at 1 penny is 41 times larger than Bitcoin is today by market cap. So my money is not on this thing ever getting near a penny.
But if your money was on it, you would be a very rich man when it got there.
I mean, we would be doing very different episodes. Like
I'd be by
the
myself.
background would be very different. Hey, future, coming back. As promised, here's a quick look back at what just happened while we were recording, talking about the next topic. I got a little distracted because this thing just started flying. Absolutely insane. So these candles here, I'm looking at the 3 minute. And these candles it was a 25% pullback, but also this was kind of identifying the next level of sorts. Kind of we talked about these different boxes that I drew here. I mean, this is a rather large box, but pulled back 25%. And in this kind of blue highlighted area here, I just checked the volume that just happened. 2 billion transactions was the volume in 15 minutes. That's nuts. Like, to put that into context, the most active stock today was 125 million. And even if we extrapolate that to be 24 hours, even though this was 15 minutes, that stock today extrapolated that's like 375 million for 24 hours of that 2 billion. And in the past 24 hours, SHIB has had 18 billion on volume in the past 24 hours. So yeah, like we were saying, algos are running this show right now.
Yeah, it sounds like they're washing some money.
Yeah.
Get that much
So
that much volume.
anyways, so what happened here is we swung up and I started to notice, I mean, while we were talking, this thing just started like jittering all over the place, which is kind of nuts to see, even on the 3 minute. Well, I guess you'll see it anywhere, but so I kind of distracted myself, came back over here, put in an order because, I mean, the bottom felt like it was going to drop. I mean, not the big bottom, but at least the next swing down. So I did get this green line sell order in. Then we came down, we hit that bottom there. And as the green candle, as this next green candle in line was forming, I tried to get an order in, but I mean, that didn't happen at all. And so these candles here are just where volume, I don't have volume actually called out on this chart, but once volume weaned down a little bit, my order actually got filled here, which isn't great, but was better than it was still decent, since we seem to have cooled off a little bit. But anyways, that was kind of exactly what we were talking about, of try to get out on a swing, and when you start to see a retrace happening or a fallback, and then ideally there's not this obscene amount of volume and you actually get filled where I wanted to buy. But now I'm back in, got a couple million more coins. So that's the SHIB update.
That's why there's so much volume. Everything is like a fraction of a penny.
Yeah, that's true.
This gives new meaning to going to zero. It's like logarithmic here. You're never really going to get to zero. They just keep dividing out the pennies.
Over to the stock market, I believe Sprocket and you, Death 8, you have an interesting plays on Facebook. So Sprocket, what is cooking in the normal world?
Yeah. So I don't know. I haven't dabbled in the world of crypto still yet. Maybe someday, but today is not that day. I'm keeping my feet grounded in the more traditional markets. And actually, this week I did put a play in on Facebook. Facebook's been in the news through the weekend, actually from the beginning of the month and back in September, about leaking information about how they're terrible, evil company that has bad intentions, and they know they're doing things bad, but I don't really care much about all of that stuff. Facebook is Facebook, and they'll always be Facebook no matter what anybody says. But it caught my attention because the price started to slide. Initially, maybe it was on some of the disclosure news. A lot of it was from the tech sell-off that's been going on in the market. And anytime that we start getting major price slides in the order of 5, 6, 7%, volatility starts to increase, and that catches my eye as a premium seller. And so yesterday, I think it was yesterday, I started looking at Facebook and I started plotting out some levels. And I don't know if I'm any good at plotting out these levels or what have you, but what caught my eye is Facebook's implied volatility was around 40%. And historically, that's a little bit on the higher side of where volatility normally falls for Facebook. And I can show you maybe a little bit later how I plot some of that stuff out. But to me, that means, hey, volatility is higher than normal, which likely means there's a reversion to the mean potential coming. And so I pulled up the chart to see where, what was driving this volatility increase. And I plotted up here with the trade that I made. And this is something that I'm actually starting to add to all of my Theta Gang trades, a hyperlink to these charts that what I was thinking when I did it. And so what I like to do is I like to go out real far. Most of my premium, I like to sell somewhere in the range of 30 to 45 days to expiration. So yesterday I was looking at basically November expiration. So that's the third Friday in November of where it expired. And I like to be in around the, 16 to 30 delta. 30 is about as high of a delta that I like to go when I premium sell. The closer I can get to 16, the more comfortable I am with some of my probability of profit. But sometimes there's not quite enough in there for me to take the risk. So Facebook, I looked at and I said, oh, well, there's about a 300 strike. And the 300 strike was collecting about $6.35 in premium. And this is an interesting play for me because when I plotted out the levels here of Facebook, you can see that I have tagged a monthly level around 295, or sorry. Yeah. About 295 was a monthly level. And so if I sold the 300 strike and I factored in the $6.35 premium, it basically gives me a break-even price a little bit below that monthly level. And the reason that's important here is because Facebook is sliding. I don't know, is this the end of the slide? Is it going to continue all the way down here to this purple level? There's a couple of weekly levels that I charted in here, and I'm a probability trader here. And so I say the probability is good that one of these weekly levels might hold as a resistance to deflect this thing back. If not, if we come down to a monthly level, it's a longer term level, so it's a higher chance of probability of deflecting off the price. And from the premium that I sold at that monthly level, I'm still not really going underwater in my trade. And then, as I've mentioned in past episodes, I do have a bailout price, which is basically 2 times my credit received for my max loss. And so, my bailout price is down here around 280. So the trade that I took was to sell this 300, collect $635, and basically, as long as Facebook trades above this mark before the end of November, likely I'll end up closing this out around the 50% profit mark. So as soon as that 300 put starts trading around $3.15 or so, I'll probably buy it back and go look for my next play. Which I think this is a little different. Later in that day, I happened to notice in the Discord that Death8U actually posted his take on Facebook, and I think he was actually posting a potential short level. Is that right? What you were posting in there, if I recall?
Yeah, that's correct. And the reason I posted that level, I have to say that I don't necessarily typically take trades that have gone down this far already, because typically I would have rather have been in a Facebook short up here, but it didn't really give too much opportunity. It kind of just fell because ultimately this move here, this swing to the high, this is a swing that made the high. I mean, you could technically call this one, but if you're being generous, you really didn't want to lose this. And as soon as it lost this, you would have liked it to come up here and take a short. Like that would have been a nice short. It didn't, it just keeps falling. And the only reason I mentioned this is I'm more of an A to B trader. So even though my idea here is take a short here and there's 3 profit targets, I don't necessarily care if I get all of them. So it is completely possible that both of our trades work out. One of the reasons I posted this short is simply because it just has a really easy stop loss. And sometimes that's enough for me to say trend is down. If we come up here, we don't really want to start gaining too much. It could come up here and close this gap maybe, but then again, you're starting to gain a daily swing that lost a move. So the trend is down, test, new low, test, new low. So if we're just going to follow trend, test, new low. And the stop loss is really easy. It's pretty tight. So there's some decent money to be made, even if you only got a couple profit targets. For me, if I got this entry and it comes down, loss probably in profit as soon as I get my first PT. So it's just a way where you can kind of trade against bigger trends and still preserve capital. Usually if it's a strong trend up and I'm taking a trade against it, a lot of times it'll be less risk and I'll be a little bit more aggressive with my stop loss. But yeah, basically the idea is the stop losses is pretty easy. You don't really want it to get above those wick behind the trade.
So you're currently short Facebook then here?
No, I have no entry.
Okay.
Currently.
So
no
if you did take an entry and you have your different profit targets there on the way down, are you changing your stop loss orders when you achieve those profit targets? Are you tightening them up then to where it is, or do you leave them kind of at your initial stop loss?
Yeah, so this was marked to say where I would probably have my stop loss. So basically, if price came down, this isn't really a great level. Probably more realistically, you would need to take profit somewhere in here. But yeah, typically, if I'm counter trend, once it hits the first profit target, I'm going to put it at break even. So let's just say that I actually get my entry here. As soon as price comes down, it's the first PT. One thing you can do is just go ahead and set it break even. Hoping is that when it retraces, it holds this instead of coming all the way back up to your entry.
I see.
And sometimes you can get stopped out on those being too aggressive, and it still follows your plan. So it kind of just depends how aggressive you want to be.
So would you ever lower your stop loss then below that initial one? Would, like, if you lost that next level?
Yeah, so I continue to low. Basically, stop loss for me is invalidation. So as I'm following price action, there's always going to be a level that I don't want to gain because that will be considered a potential reversal move that make a low. So let's just pretend price comes up here, does one of these, right, and then makes a fail PT. I certainly don't want it to start gaining these levels back.
Yeah.
So essentially my stop loss starts coming down. I'd probably move it somewhere right here. Where I really don't want. I don't even come over the bottom of this because this was pretty good support. The support that's now resistance. And then the same deal is if it ultimately went down here, so move the stop loss once, move the stop loss again, type of thing.
Nice.
Depending on the percentage, sometimes I'll even be more aggressive. If I hit a PT here and then let's say this is like 10% or 15%, it's like I don't want to lose out. Let's just say I don't want it to gain this really. I'll be really aggressive with it and just look for another entry so I get stopped out and lots of profit, and then look for a potential reshort if it does proper things.
Okay.
That's just kind of how I'd look at it. So
I have a question for those of you that are always kind of charting different price actions and stuff, and I try to kind of, but one of the things that I'm always kind of curious on is where do you start? And what I mean by that is sometimes I see people chart things back from the beginning of time, and sometimes I see people chart things from the end of time, like from current backwards, and monthly, weekly, hourly, like where do you start? I guess a lot of it depends on your trade horizon that you plan to be in a trade, but
yeah, it kind of depends on what you want to do. So if I go to Facebook on a chart that is, I don't mark as many levels as I used to, because I used to mark the entire chart. But now I trade so many different tickers. I kind of just look at real quick. I look at hundreds of tickers. I mean, I'm just constantly looking at them, and I can kind of quickly glance at them at this point and see if I'm interested. But what I usually do is I'll start at the higher time frames. So you start at the monthly and then just start marking levels. You know, you don't have to go to the beginning of time. It just really matters of where you're interested. And what I mean by levels is you're just looking for some type of importance, you know, price reacted to it. Because you could almost put a straight line anywhere on a chart and get some type of level, but that level may be completely meaningless. So I typically look for where it made highs, and then was there a reaction at that high? Lost it, and you know, price reacted to it twice. So okay, that's an interesting level.
Okay. Yeah, because I see that a lot too, and this one is pretty upward movement, but for some of the other ones that kind of come back and down a lot, sometimes I debate on which ones to mark, and I kind of err on the side of, oh, if I draw this line, it acts as support multiple times from swings. And so I typically tend to mark that because it seems more relevant than some of these other ones that you just draw and maybe it touches as support maybe one time.
Right. What you're ultimately looking for is support turn resistance or resistance turn support. And those are kind of your levels. And usually in between it are ranges. So like I marked this high, I marked this high, and you can kind of see how it ping-ponged in here. And these are, a lot of times these are good to not trade in the middle of ranges. But when you're on a monthly, these are pretty huge ranges a little bit. But I just kind of use levels to get ballpark ideas. I don't trade directly off of them. It's kind of just me knowing where trend is and where ranges are, and then I use the price action to actually make trades. So like, let's just say I go down to the weekly here and I start marking this stuff. You know, this is already interesting to me that we have a weekly swing here that we lost and we never tested it at a weekly level. So for me, if price was, let's say we start gaining on Facebook, if we start gaining on Facebook, I'd absolutely look at a short there because we've lost important levels. We've lost the move that made the high, and it was a weekly. It's got short written all over it. And if I did a short there, most likely it'd be a stop loss somewhere above the.
So if I can clarify, you're calling that significant because that candle basically dropped through the level. It didn't ever stop there. Okay.
Right. So if you go to a lower time frame, this is one thing you have to be careful with. Is I'll see, you know, it at a weekly level it didn't get tested, but did it get tested on the daily? Not really. Okay, how about 4 hour? No, you know, get all the way down to like 15 minutes.
Man, I don't hardly ever go below daily.
And that's fine. If it tested on the 15-minute, you know, it's still probably a valid short. But yeah, this level right here hasn't been tested. Like this, essentially, you want to hold this. This was the move that made the high. So it's okay to come test it. You really don't want to lose the top of it, but it's okay if you hold the bottom of it. But once you close below it, that's the indication of a reversal. Start looking for shorts at the absolute ends of ranges is that indication of a reversal. You can do it almost anywhere. Like, you know, this is all hindsight stuff, but if you just do it on your charts, you'll start to see like here we made a high, it didn't gain. Here's the swing that failed. So that's important. I marked it and there's a perfect short. Like if you just put in short and this one would have gave you, you know, I basically would have had a profit target somewhere down in here. Could have potentially reshorted it, but I probably wouldn't have. But as soon as it made another new low, and what I mean by new low is this is a swing that made the failure, and then this is your short. So this was the move that took you up, and you got your short. You're kind of looking for it to lose that before you reshort. And it didn't yet there, but it did here. So then there's another short opportunity. They're not. It just all depends on stop loss. Where is the invalidation? Because if you take a short here and your stop loss is right here, there's so much potential for a big position there. I'm very risk adverse, so I only risk typically 0.5% of my account per trade. I just take lots of trades. But any given trade, I'm only going to lose about 0.5, sometimes 0.3% of my account if I get stopped out. Never more than 1%.
That's pretty in line with the I guess risk level that I trade to. It's a little bit lower risk than I think for mine I'm usually around the 1 to 2% in my trade. So I guess it's a good bit larger, but it's definitely smaller than some of the stuff I read about people people say they trade.
Yeah, absolutely. I think 1 to 2% is, yeah, it can be fine. It just kind of depends on your preference. But yeah, anything higher than that is, to me, just not on any single trade. To me, it's
Yeah.
just not worth it.
Yeah, so I think on the where and when to draw levels and things like that, I definitely started, back when Death 8U was kind of teaching me some fundamentals of charting and things like that. I started by practicing on just like, charting an entire history of a ticker or something like that. You start at the yearly level, drill down. I mean, I think we've done an episode on that where I kind of walked through that. And now in hindsight, now I would recommend that. I would definitely recommend that to people as practice, as exercise, because it really helps you start to see how things happen, in those ranges. But to make a play, it's definitely much more of the what kind of play am I making? So Sprocket, like you said, you don't generally go any lower than the daily, and that makes total sense when you're dealing with options plays and things that are going to be slow burn or a month or a month and a half. And I generally operate, if I'm day trading, which I still suck at, so I'm not really doing that. But like that's the minute candles, or in intraday, I rarely look outside of the day that I'm day trading. And on a more traditional play that I get into, where I'm looking to flip something within maybe a week, hopefully nothing's known, but I'll look at the 45-minute I go to a lot, the 3-minute I go to a decent amount, and basically the swing I'm looking for is where's the price now, and what is that context of that price with any recent moves or any recent action. And I'm specifically looking for a swing where there was clearly higher lows and kind of what Death 8U keeps saying of, a swing that made a high. Because if I'm looking at something and we're just high, I'm not looking at that for a play. So if I'm looking at something, there's generally a retrace, because I also haven't gotten into shorts all that much. There's generally a retrace, and so I anchor myself to whatever the previous massive swing was or notable swing. And all that really kind of comes out in nuance and style, which is why I recommend just for, a little bit at the beginning, not basing any trades off of it, just go chart something, as I've talked about in previous episodes, of looking at the history of a ticker, start at the 12-month, go to the monthly, go to the weekly, kind of stop there.
Yeah, I kind of I agree with that a little bit. I've learned quite a bit by zooming way out. I tend to not really draw levels below weekly though. I look at daily charts, but I usually look at them with the context from the weekly levels, as you can kind of see from my Facebook trade that I made.
Yeah, and yeah, time frame's important. It doesn't make too much sense to mark 15-minute levels if you're planning on taking, trades that you may hang on to for weeks.
Yeah. So I mean, if you just kind of look at the trade that I made here on Facebook, the color bars here of this strike, this is basically the duration of my option. And so that length of time for me, charting daily levels doesn't help me too much. So I mean, I can kind of see the daily candles that I'm looking here at the daily chart, but the weekly levels are kind of relevant to me, and I kind of only put them down so far where working forward or working from now backwards to where I care about. And then basically my bailout price is here. So I don't really care what levels exist below that. Well, that brings us to the end of this week's special episode of Special Guest and looking at crypto and Facebook in the markets. Hope you found it somewhat interesting. The world of crypto is something that we continue to learn in and continue to dabble in, and rest assured, we will bring our experiences to you, the good, the bad, and the ugly. So good luck out there this week. Probably proves to be a choppy week upcoming in the markets, lots of turbulence, but good luck out there. And remember, think outside the block.
Yeah, this is interesting. Yeah, I think even if it does reject that level, I don't think it's really going to fall on its face. But one thing that's interesting with the meme coins is it will get to that point where that the market makers just have a big laugh and dump the mess out of this thing to just grab all that liquidity. It'll be interesting.
Nice.
Yeah, I mean, usually on stuff that's this aggressive, I would be pretty aggressive with profit taking, or at least a stop loss, and just keep, like you mentioned, trailing the stop loss.
All right. We'll close it out here.
That's all. Go for it.
Nice follow-up.